Well, many healthcare stocks are down from the highs put in earlier this year, but according to our featured guest today, the sector may be poised for faster growth than the broader market. Joining us now for more is Tarik Aeta, Global Healthcare Analyst at TD Asset Management. Tarik, great to have you on the program. Let's start there. What's the thesis? What's the thinking here that healthcare could outperform the broader market?
Yeah, so when we take the 10,000-foot view and even zoom out beyond the investment implications, our personal health is our greatest asset. Good health gives us hope, allows us to pursue our passions and live life to the fullest. And when you take this back into the world of investing, healthcare as a result benefits from several attractive qualities, including inelastic demand and strong growth. And what drives a strong growth in healthcare is really two very, very simple things. First is a growing and aging global population. Here in Canada, for instance, while population growth is roughly 1% per year, for adults over 65, it grows 3 times as fast. And as we all age, we all need more healthcare services. And then the second driver of healthcare growth is innovation. Just like the technology sector, innovation opens up green space potential for these companies to continue to sell more products over time, whether we're looking at transcatheter heart valves, clear aligners, genomics, immuno-oncology drugs. Many of these products didn't or barely existed 20 years ago and have since become large revenue generators. So as the sector continues to invest in research and development, growth in the sector will remain robust for many years to come.
So we've got 2 key drivers there, including, of course, we know the aging population, the effect the boomers have had at every stage of their lives, and now that they're firmly in the golden years. What about the recent earnings season that we saw? What's the snapshot look like for just the past 3 months?
Yeah. So overall, earnings were solid for the healthcare sector. So revenues grew 10% year over year. Earnings were up 9% as well, with 84% of companies beating or meeting estimates. When you look under the hood, the top sector, the top industry in the quarter were the pharma companies. So pharma sales grew 15% year over year. Pfizer, however, led 80% of that growth thanks to their COVID antiviral. In second place were the health insurers in the U.S. They grew 14%, driven by strong demand for Medicare Advantage, which is health insurance for seniors over 65. In third place were the life science tools company. They're benefiting from continued strong demand for the tools and services required to discover and manufacture drugs. And the one area that did struggle this quarter were the medical device companies. Sales were only up 4%, and that was driven by hospital staffing shortages that held back elective surgeries.
By breaking all that down the way you did, it does give us some insight in the terms that people will say, oh, investing in the healthcare sector. But you start breaking it down by silos, you realize there's different kinds of companies operating in the space. So how do you approach that as an investor? Yeah, so as an investor, you just have to look at the fundamentals for each of the different silos. So for instance, when I look at the sector, there are 3 big buckets. There are companies that are discovering drugs, the companies are developing widgets, and the companies are delivering services, what I call the 3 Ds of healthcare. So yeah, for the companies that are discovering drugs, these are your pharma and biotech companies. While the big mega cap companies do provide a lot of stability, they provide higher than above average dividends, over the long run they've had a hard time outperforming due to the fact that they're constantly running on this treadmill of drug and patent expiries. The second big bucket in the sector are the companies are developing widgets, so these include the medical device companies, the life science tool companies. They benefit from the same secular tailwinds of demographics and innovation that we talked about. But unlike the pharma companies, you don't take the tail risk of patent expiry and high risk of R&D. So as such, you find some higher quality companies there. And last but not least, the companies are delivering services. This includes the big health insurers in the U.S., the telemedicine companies, the hospitals, the dialysis clinic. It's a bit of a mixed bag over here, but the nice thing about the sectors are some pockets like the insurance companies that benefit from some of these secular demographic tailwinds, like an aging population, which is something that does help them over the long run. Going forward, did we get much in terms of guidance from some of these different companies and the different silos as to how the second half of this year might look?
Yeah, so looking to the full year 2022 guidance, we saw revenue guidance taken up a touch over the quarter. And then, yeah, when we looked at EPS guidance, those numbers came down a touch, driven by margin pressures. So yeah, you have companies like the medical device companies that their sales grew, but at the same time, their costs went up, including higher wages, higher commodity costs, higher shipping costs, and also they sell to hospitals on these 1 to 3 year contracts, so they struggle a bit. But yeah, if you look at other companies like the life science tool companies, they benefited because not only were sales strong, but they were able to pass those inflationary pressures forward to their customers. Thanks to the business model where there aren't these long-term contracts, and it's easy to pass along those higher prices through higher list prices.
Tarik, when I think about some of the criteria laid out, both as as a space for innovation, obviously, and there's a great deal of money put into research and development, and of course the demographics as the boomers changed everything as they moved through society, they changed healthcare as well. We're talking really like long-term, long-focus investing. Like you're in this sort of for the long haul if you believe in this thesis.
Yeah, I mean, in healthcare. You have to invest for the long term, just given a lot of these cycles do take a lot of time. When drugs are discovered and brought to market, I know with COVID vaccines it happened really quickly, but generally these are long cycles that take many years to play out. And the same thing when you have new innovations and you're trying to get adoption amongst healthcare practitioners, it doesn't happen overnight. Usually it's a couple-year process. So yeah, an investor in the healthcare sector, you need to be long-term focused, and that allows you to really capture those benefits over the long run.